When I woke up this morning, I saw something incredible. Over 700 new subscribers have joined the channel in one day. This is a huge milestone, and I can't thank you enough for your trust and support. It's an enormous responsibility to provide top-tier market analysis every day, and I'll make sure to keep delivering the sharpest insight to help you stay ahead. Now let's talk markets. Volatility cooled off, but is this just a calm before the storm? The dollar continued forming a bottom. Are we looking at a continued reversal? Bond yields moved down. What does this mean for risk assets? Natural gas rallied as predicted. Where does it go next? Oil remains full of uncertainty. Will it break or hold key levels? Silver is playing a dangerous game with signals. Is a major move coming? S&P 500 and Nasdaq failed in the last 15 minutes. What is the impact and what comes next? S&P 500 sectors overview. Which one are leading and which are lagging? And special features of today. A deep Elliott Wave dive into the Russell, Palantir, Meta, Amazon, and XLK, the tech sector. And of course, we've got a tricky quiz question coming up. Let's see if you can crack it. Drop your thoughts in the comments, hit like, subscribe, and turn on notifications so you never miss a key market update. Now let's dive into the charts. And as usual, we start with volatility. Volatility cooled off, no questions about it, and formed daily bearish candles, so the chances for a move lower tomorrow are fairly significant. However, if we look at the bigger frames, and we don't have 2 and 3 days momentum here today, but we are looking at the weekly. The weekly is still on a boundary. So far, it is holding the support, 8-week CMA and 200 weeks moving average, yellow and purple lines, yellow and red lines, respectively, and the same is for the futures. So in order for volatility to prove that this is everything is good and we are going to lower lows, and markets obviously would be looking for very high price. So in this case, the volatility needs to close below the low of the green candle on Saturday. We have 2 days to watch, and let's see what will happen. So far, I'd like to say that the trends, volatility trends, are bullish. Now let's have a look at the dollar. So as we discussed yesterday, and for a few days already, I think we're talking about it for a week, that dollar has been forming a bottom right now, and it is right now closer to this event. Today it formed an inside up candle. Oh, well, it's still 1 hour 26 minutes left, so there is a good chance so it forms a bullish candle here, and there is a good chance that it will be continued higher. And yesterday we were discussing this just a few minutes before the closure, and I mentioned this particular level. As you can see, dollar closed just a few basis points above this level, technically keeping the odds bullish here. And now this is a big candle that is being formed right now. It will be closed on Friday, and we will see what happens next. I think that there is a very good chance for dollar not to only form something bullish on the daily frame, but also extend the bullish odds into the 3-day and possibly even to the weekly frame. Let's see how the next 2 days go. And now let's move into our bond market and let's talk about yields and bonds. So today, at the beginning of the day, it was an amazing bullish continuation candle, but following the announcement, the chances and the candle flipped bearish, and right now we are looking for a tower top here on the daily frame. Similar similar very strong candles, very strong bearish candles completed on the 10, 20, and 30 days frame, 10, 20, and 30 years yields. And right now, the question is whether this momentum extends lower or not. And in order to do this, we are looking for the 2-day frame, which will be closing tomorrow. So far, it looks bearish. However, I am very cautious about it because we know that the bigger frames were closed with bullish signs at the end of last week, and we need to see a strong reversal, and it doesn't mean only on the daily frame, so we need to see a stronger momentum across multiple frames. And tomorrow would likely be a key day for extending the momentum to the bigger frames. And now let's have a look at the spread. So this is a big concern, by the way, and this is why this is Elliott Wave for the spread. What I'm seeing here is that potentially spread formed in impulse here. This is an impulsive wave, and now what I can see here, and it is already done. So the impulse upward, potential impulse upward, has been invalidated by this move lower and the cross over this level. So at best, right now, it could be either this formation, ABC. Let me make it brighter so that you can see. So this would be either this formation, ABC, or it could be a slightly bigger one. I would be looking A, B, and C potentially here. So after, once it's done, we would be looking for another wave down. And well, this would be something that Elliott waves are telling us right now. So this is the perspective for the spread, and this is indeed very concerning one because this red line here is the ground zero. And we already talked about this potential formation from Elliott Wave perspective multiple times. If you're interested, you can watch it in our previous videos. So that's the perspective for the spread. And speaking about the 20-year yield, so it failed to develop an immediate wave upward, so we are removing it for now. But I would like to say that there is a very good possibility that this wave, it's not an impulsive wave down, and most likely it's a corrective. We might see a wave 2 extended. So in this case, it would be this wave, A, B, C, instead of this smaller one. And once it finds support here, we might see a true and strong wave 3. So far, this hypothesis remains on the table, and we are closely watching on what is happening, how things are developed here. And from the 20-year yield, we are moving into TLT. So TLT is made me scared actually today because of the closure. And I'd like to say why. Because technically, this candle, the green candle, could be a bullish reversal confirmation. Could be, I'd like to emphasize. But unfortunately, it closed exactly at the same level as the high of this candle, the red one. And technically, from the candle perspective, it's a failure, and it's a big failure. It's a failure to confirm bullish reversal. So it means that right now odds are bearish, and the chances, even though we might see a higher high, the chances for a move lower are significant. And this is happening on daily frame, and the same thing happened on the 2-day frame. We have two candles failed to surpass the high of the previous one. So, and from the weekly perspective, this is still a neutral one. We are looking for confirmation for either up or down. At this point, we need to wait for another 2 days. But the daily is a failure right now. And what does it mean by from the Elliott Wave perspective? We already discussed it earlier and for a couple of weeks that this particular formation is possibly a bearish flag because right now we have too many overlaps here and better chances for a moving lower in either red path or purple one. Even though the alternative A still remains here. And what I can say that it can form a bigger bearish flag, something like this, and even try to hit a higher high. However, I'd like to say that this wave that right now TLT is forming here is a corrective wave, and there is no way it is going to be changed into an impulse unless it hits a lower low. So the chances, so everything is corrective right now, and whether this is going to be in this one, wave 2, and wave 3 here, wave 4 and 5, or this was wave 1 and now we have a more complex wave 2. Both paths are probable right now, and the only thing that I'm not looking for a bullish perspective here because of so many corrective waves. That's the perspective for TLT, for bonds market. And now let's have a look at commodities. And we start with natural gas. So as we discussed for a couple of days, natural gas was forming a bottom, and ideally it shouldn't be moving below this line 3.955. So it successfully held this line, and right now it looks like it's launching a rally, and the rally looks impulsive so far. And since our code on the bottom, it's already up by over 5%. So the perspective is this green triangle. It's a target for wave 3. Then we might see wave 4, wave 5 will be followed. So that's the perspective. And if we look at the candles, candles are totally in agreement with Elliott waves. We are seeing a confirmation of a smaller bottom, and we are seeing a perspective for a very strong bullish candle on the 2-day frame tomorrow. And as I said, the weekly frame wasn't convincingly bearish. It was likely a bullish continuation candle. What we might see a couple of moves up and down before the next move higher. So natural gas plays well. Now let's move on to oil. Oil formed today a doji. Most likely it's a neutral one. We still have a chance to see higher highs. However, I'd like to emphasize that this structure here is not entirely impulsive, but we'll get back to it once we start looking into Elliott waves. And from the 2-day frame, this candle today, the closure is bearish technically, and better chances to move lower. The weekly frame remains bearish, and if it closes with the candle like this, the week, then it's going to be a bearish continuation candle. Speaking about our chart, this is the perspective right now. I think that oil formed an impulsive wave 1, potentially wave 2. It might go a little higher, but in general, we might see wave 3, the next one, in the next couple of days. The target remains the same, 63, and there is nothing else I would like to add here. And the next target, or the next marker, will be the weekly closure. Now let's talk about silver. Silver is closing in 15 minutes, and it has a chance to form a slightly bearish candle here. Would be an inside down if it closes at this level. The 12-hour frame, it formed a tower top, and now this is technically a bearish candle if it closes at this level, if it doesn't go higher. And overnight we will see what kind of candle it forms, and the next move will be crucial, whether it confirms or not this initial move on the daily frame. And the concern that we outlined in our weekly report about weekly candle moving above Bollinger Bands remains on the table. We might see, if silver forms a doji like this, it would be very similar to what it did in October, and I would be looking for at least a mid-size pullback here. Speaking from the perspective of Elliott Waves, nothing changed on the chart that we discussed in our weekly report. If you are interested in the detailed explanation of what these green, blue, and red path mean and which one will be invalidated when, so I'd like to encourage you to look at our weekly report and also watch our weekly video. We discussed more there. And the final thing that I would like to say about SLV Trust and the scary candle that it formed today on the 2-day frame. Technically, the daily is somewhat bearish neutral, and it's still holding the major support. However, the 2-day frame formed a strong bearish engulfing over a hanging man, and this could be the beginning of something bigger. So the next candle forms on on Friday, and we would be watching it with great interest. Let's see how silver closes. So that's the perspective for commodities. Now let's move on to the indices. So what happened today? Technically, this candle is green and inside up. Technically, everything looks bullish. However, the same thing for Nasdaq. However, there was a very strong bearish event at the end of the day, and as you can see, this fairly significant upper shadow happened in the closing minutes of the trade. And I'd like to say, if we look at the 2-day frame, for example, not here. So on the 2-day frame, it failed to close above the closure, or even better, above high of the previous day. And this is a big concern, because this technically transforms a bullish candle, which could be a bullish continuation one or some other one, into a bearish harami by just few basis points. And now the odds are slightly bearish. The ball is in the bear's court. Let's see what happens in the next 2 days. But this is kind of early warning. And the same happened, I believe, for triple Q. Yes, for Nasdaq. Nasdaq, instead of forming a bullish continuation candle, it formed a harami, a bearish harami candle. For the difference, Dow Jones and Russell, they formed bullish candles. However, they are not as bullish as I would like to see. The only strong bullish is for Russell. Whether it's gonna be a leading indicator this time, I don't know, but we would need to see at least a weekly closure for Russell in order to make the next moves. And Russell today is one of the special features. We will talk about it just in a few minutes. Speaking about the candles for the futures, we have the same issue. Technically, we had a very strong bearish candle yesterday, and today S&P 500 and Nasdaq tried to negate these big bearish moves, but they were not successful. And this is a concern for these two. It is indeed a concern. Dow Jones is okay, and Russell futures are always also fine, so they have a chance to move higher. And now let's have a look at, oh, this is 2-day frame, we already discussed it. Now let's have a look at Elliott waves. So this is our chart, this is the perspective, what we were discussing. So I would like to say that there are two possible paths right now on the table. One is the blue one with the potential wave 5 looking for lower low, or this would be a corrective A, B, C for wave B, and wave A is possibly done here. And in our special study today, I discussed with the subscribers that why this wave is corrective here, and how it aligns with the other micro waves of major indices. That's quite an interesting one, and if you're looking into it, you would understand what the implications from the Elliott wave perspective. Now let's have a look at the sectors, and the sectors technically they're all bullish today. We are seeing very strong bullish candles on financial, technology, everything but consumer staples. Consumer staples doesn't think that this is the bullish case. This is a bearish candle here with fair chances to move lower. And I would like to say that tomorrow is probably going to be a good day if we look at the candles. However, I'd like to emphasize that if you remember our discussion just a few days ago, when we were looking at the closure of the 10-day frames, and 10-day frames for technology, for financial, for industrial, they were strongly bearish. And technically financial even confirmed the tower top, and technology made a doji technically also confirming a bearish engulfing for a move down. And the same or similar formations happened on the other sectors. So this is something to keep in mind. While we can see a rally or a bounce for a couple of days or even weeks, the bigger frames remains bearish, and this is a big concern. And I'm not even talking about technical perspective, which we discussed numerous times, and you can rewatch it for refreshment and just to have a look at our weekly reports, weekly digest, where we discussed many of these. Now let's have a look at the large stocks. So technically they are somewhat neutral or bearish. There is no clear answer here. There is an attempt to form some bottom, but it requires a confirmation. I cannot say anything strong about this. The only thing that I'd like to emphasize here, this is NVIDIA, and NVIDIA, it looks like it's gonna form a 50 by 200 days moving average bearish death cross tomorrow, no matter what happens. Now let's have a look at Nasdaq. This is our chart that we've been tracking for a while. It is right now in the target area for the second time. And I would say that from the perspective of the formation, the chances for a blue path are substantial. And let's see how it develops in the next couple of days. So far the blue path, that would be about 17% loss. However, at this wave upward is corrective right now, and I'm not seeing how it develops into an impulse. Although we'll see what happens in the next couple of days. And I'd like to emphasize that the weekly closure last time was very bearish, and we need to see at least a weekly reversal for Nasdaq. Now let's move on into our special features, and we'll start with Russell. So Russell technically sent several controversial signals today. First of all, it's bullish signal on the daily frame with better chances to move higher, and the 3-day frame, if it closes like this or higher tomorrow, it will be a significant boost to its bullish odds. However, at the same time, Russell formed a 50 over 200 days moving average bearish cross, and this is a big concern, I would say. So some technicals signal that we might see lower lows for Russell, and I keep them on the table right now. From the perspective of the chart, this is our Elliott Wave chart that we've been tracking for Russell since February 12 for over a month. This chart as we charted, and it remains the same. Nothing changes, we just add more components to it. So after the initial impulse down, it was a big ABC wave for wave 2 or potentially B, and now we are looking for an impulse for wave 3. So far it's been flawless, and we are looking for another wave down. At this point, Russell might move a little higher without breaking any structure right now. So that's the perspective for Russell. Now let's have a look at Palantir. Palantir is also tracking our path as we discussed a week ago on March 12. So far it's been forming wave A, B, and potentially B. I'm not sure whether it's going to be wave impulsive wave here. Most likely this is going to be another wave ABC inside A, B, B, C, something like this. And after a larger correction, we might see another impulse down. So I would say that this impulse is a significant development, and we would be looking for another wave. And if we look at the bigger chart that we discussed multiple times, starting with when we first shared it at the beginning of February, saying that Palantir is about to hit its top wave for wave 3, and now it is forming exactly the wave that we outlined. So today is March 19, by the way. Yeah, so that's the perspective for Palantir, and speaking from the candles perspective, also it is following the perspective, the outlined path. After the dark cloud cover on the 10-day frame, we said that we might see a couple of weeks of attempts to negate this candle. The first week is obviously a failure. Oh, pardon, not week, it's 10 days. The first 10 days a failure. Now we are looking for another 10 days, 2 weeks. After that, we will be looking for a move down. And the monthly closure here will be significantly important. And if it is a bearish engulfing, well, what can I say? It will be a move into at least 60, maybe 50 range for Palantir. That's all for this one. Now let's talk about Meta. This is the chart that we outlined back in February. So far it's been working great, I would say. So now Meta formed an impulse of a very high degree, and I would be looking for a bounce here or for corrective actions for either wave 2 or B. However, if we look at the candles here, candles are not exactly in a bouncing mood, I would say. Right now, Meta is trying to hold the 200 days moving average, but I'm not sure it's gonna be hold here. So that's this is the 3-day frame and this is the weekly. If the weekly closes like this or lower, we might see an immediate continued move down. And the 15-day frame was super bearish. Now we are looking for another wave down and a freshly made bearish cross on the MACD. And speaking about the longer term perspective, this is our call on Meta in February, at the beginning of February, when Meta was about over 700. We said that it's closing its diagonal, potentially a double diagonal, and it's gonna go to 583. So far, this is exactly what happened. So that's a great target, and Meta right now accomplished this. So that's the perspective for the midterm frame and the large term frame. This is what we also discussed at the same time. This would be the perspective for Meta if this is indeed wave 3. So we would be looking for a return somewhere between 530. Let me put the price here, 530 and 412. That's the most typical target for this type of correction. So that's about Meta. And now let's talk about Amazon. So Amazon is in technically the same position as Meta, and we made a call on this one also early in February, saying that Amazon is about to form a diagonal and it is going to go towards 200. So that's exactly what is happening right now, and Amazon is trading 195. So the chart played absolutely well, and it's already 20% of the top. So the chances right now that the wave, potentially wave 1 or A, is complete, and we would be looking for this particular formation here, perhaps a bounce corrective one. However, at this point, it's very difficult to say, because we need to first to see a confirmation on the candles so far. And this is the weekly frame, and Amazon, it looks like it is ready to lose a 50 weeks moving average, especially if it forms a red candle like this or even lower. We might see an immediate extension of this wave down towards this area, or maybe even lower. So that's another perspective that remains on the table. And the final one, this is our initial call on Amazon on February 4th. And this is the long-term chart that we outlined. So the chart remains unchanged. And as you can see, wave A is perfectly done. So now we might be looking for wave 2 and wave C. However, I'd like to emphasize, I'd like to see how it closes the week. Potentially, we might see a bounce or even a fairly sizable rally. And the final discussion of today is XLK. XLK, it's a technology sector, and we will start probably with this one. So this is our call on technology that we made earlier in March after we saw this. This is the 1 monthly MACD bearish cross that XLK formed. And if we just assume that it is going to be the same, the reaction is going to be the same as in year 2022, and the technologies, when the technology sector lost about 35%. So this would be our reasonable expectation here. Perhaps an ABC correction, a very sharp one, I would say at this moment, and losing about 35%, and the target would be somewhere 160. Well, that's the perspective from the technical side. If we look at the candles, so the candle so far looks like it's forming bullish formation on the daily frame. However, the bigger one are not as bullish as the short ones. So the chances right now for moving lower are significant. And if we look at this potential frame and the potential chart, what we are seeing here is that this wave is most likely corrective. This is possibly a bearish flag of some sort, and if it forms like a short one, we would be looking for the completion of wave 3 possibly. But if it extends higher, well, then we might consider that wave 3 was here and this was wave 4, or even an ABC of wave B of a larger degree. That's the perspective. The main message here is that this wave is corrective, and it is expected to resolve and find lower lows. That's the perspective for the technology. So to summarize, today's session revealed critical shift across the markets. Volatility cooled, but for how long? The dollar's bottoming process continued, and can we imagine if dollar rallies tomorrow like there is no tomorrow? While yields moved lower, raising new questions for bonds and equities. Natural gas delivered as predicted, but oil remains a wild card. And silver is playing with fire when it comes to technical signals. S&P 500 and Nasdaq's last 15-minute failures could be a warning sign. Are we looking at just a shakeout or something bigger? And our Elliott Wave deep dive into Russell, Palantir, Meta, Amazon, and XLK uncovered some massive developments that traders need to watch. And the chances right now, I cannot say they are entirely with bulls. So what is your take? Is this just a minor setback for equities or the start of something bigger? Drop your thoughts in the comments. Final reminder, smash that like button to support the channel. Subscribe and turn on notifications so you never miss a key update. And if you want deeper insights, check out our latest reports on indices, commodities, bonds, and top stocks, available now on our website. Stay sharp, trade smart, and as always, happy trading.